I want to ask both of you guys. So, Tom, is there going to be a breaking point? I know Michael Burry, Pat, he's predicted, he's bet against it. Do you guys feel that it's something that's inevitably going to happen, and this administration, Pat, is just hanging on for as long as they can so it doesn't happen during their administration?
Can I give you a scenario?
Please.
You know, I'm having this conversation with Brandon, and you know, Brandon is biz doc on Unusual Suspects.
On steroids, because he's like
one of the smartest guys.
I love him.
I'm sorry, I forgot about his biceps. Yeah, he's got to do double bind on the next one.
Brandon is...
I love the shirt he wore on the last episode. But let me kind of talk about this whole thing you're talking about with market crash. Okay, with whether it's going to eventually backfire, something happen.
Got you.
You know what's worse than a market crash?
What?
A market crashing up. You know what happens when a market crashes up, like Venezuela did?
No.
Here's what it means. Okay. Do you know? Oh my God. You know where I'm going with this. So these guys printed trillions of dollars into the economy. Mm-hmm. That money's in the economy.
Printed, Pat? You said printed?
No. That money's in the economy. They fed the economy trillions of dollars.
Okay.
So that money goes where? Whoever has the most value to be shown, that's where the money flows.
Okay.
The money doesn't stay with a person that doesn't know how to manage the money. If you don't have value, the money goes away to somebody else. Okay. A reverse market crash would happen. Do you know what would happen if right now Jerome Powell decreased rates to 6%, 5%, 4%, 3%? Do you know what would happen today? You think that house that's $900,000, that the value hasn't moved even when they raised the rates to 8%, that $900,000 house is going to be $1.4 million. If it goes to $1.4 million and Dow Jones all of a sudden goes to 48,000, you know what just happened? This whole concept of rich getting richer, poor getting poor, it became rich getting richer, poor getting poor on steroids. The separation between the two gets wider and wider. The gap, take the poor, middle America's always been like this, then you have the rich top 1%, whatever the percentage is. You're going to see the gap go like vroom, vroom, vroom. Mm-hmm. Did you understand what I mean? Like this is going to get bigger. The top rich is going to get bigger. The middle is going to come lower, but the poor is going to get bigger. How the hell are you going to, if you can't afford a $900,000 house right now, how are you going to afford it in a year if they lower the interest rates to go to 3, 4, 5%? Some of these realtors that are being irresponsible just telling everybody, well, wait till the rates come down. If the rates come down, it's reverse market crash. You want that to happen to Venezuela? Like what happened to Venezuela to happen? Oh, it'll never happen. You're just fear porn, all this stuff. Really? People can't afford to buy a house right now. There's a reason why they're renting. You're not going to have a customer qualifying for the $1.3 million home. Yes, you have equity in your house, but even if you got equity in your house, you got to find a buyer. Buyer can't afford it. There's a reason why we have so many strikes going on in America right now. People are saying, I can't afford my life. I can't afford a $900,000 loan. How the hell am I supposed to buy a $900,000, $600,000 house? So to me, when you're saying, is shit eventually going to hit the fan, essentially is what you're asking for. The amount of hate and pressure Jerome Powell has right now for taking the rates where he's at, he would have taken it higher. You're going to give an update on the rate here that he would have gone up another quarter of a point or whatever that is. By the way, do we have, is this, okay, check this out. Here's Venezuela's reverse market crash. No one in the right mind thinks that, Rob, I just texted it to you. No one in the right mind, does anybody think that Venezuela has a great economy? Does anybody think Venezuela has a great economy? Does anybody say, oh, Venezuela, their market is freaking amazing, stock market, da-da-da-da-da. Pull this up real quick and show what happened to Venezuela's market right there. Okay, stock market. This is what you call a reverse market crash, where the market just goes, bingo, boom, straight to the roof, okay? And it looks like, hey, guys, look how great the economy is doing. Look how fantastic. No, it's a lie. It's a lie. The top 1% is killing it. The rest are getting destroyed. Watch this here, okay? You know who would want something like that? Guess who would want something like that?
The top 1%.
Yeah, the top 0.1%. Like, yeah, let's do it. I got my money in the market. I'm going to be fine. Yeah. Overnight billionaires. The level, by the way, look at the months. Just go look at the months. Actually, look, do you guys really see this chart or no? Do you see what this chart is?
1 week,
10 months.
Guys, it's only a 1 year chart. Mm-hmm. A year ago, where was their stock? Venezuelan stock market, all the way at the top.
Was that
IBVC? It was at 10,000 a year ago. It's at 63,000. The market's gone up 630%. In less than Tom, do you see this chart?
Yep.
In less than a year. So I pray, and every American person and realtors and loan officers should be praying for rates to stay the way they are for a little longer. They should. At least another year or two. It needs to stay at this rate. Then maybe we level off at 6. FYI, if unemployment and things don't start moving, you know what Powell's going to do? He has to go up another quarter. He has to go up another quarter until that moves. So there's a bigger crisis that's brewing right now that most people are not talking about. It's called a reverse market crash. That's a scary side. Tom.
Yeah, and let me paint a simple picture for you. Okay. Step one, the U.S. government gave out like $1.4 trillion in stimulus checks. Over the next 6 months, and we've talked about it on the show, credit card balances dropped to under $500 billion, like 400. Okay. Then they went all the way back up to 900. At the same time, the stock market started running. You want to know why? You know where all that credit card debt is? Stuff. People bought stuff. Stuff that was sold by companies on the stock market. When they were saying, well, we were getting out of COVID and the market's way up, so I guess things are okay. No. We printed $1.4 trillion. People paid down their credit cards temporarily, but went back to their spending habits. Restaurants were open, able to travel, and they spent all the way up now to the credit cards are at an all-time high, right at $1 trillion right now. And all that money, it went to the stock market. How'd it go to the stock market? The profits of the companies that sold them all the stuff. Do you see it? So it runs to the top. That's part one. And part two, I wish we could find it, Rob.
This is an issue that no one's talking about.
Do you guys follow how that works?
Yeah.
The money runs to the bottom line of companies and the pockets of the top 1% that own those companies.
Right.
Now watch this. You remember you just saw the chart, Venezuelan chart. So go to Zillow and find me any house in Fort Lauderdale over $2 million.
And then, Pat, while he's looking, so that's going to separate, like, the poverty, like there's...
Wow. Very bad in the Syria. Yeah, it's not a...
So that, and you're saying that might happen here.
If Powell doesn't lower rates, it's not going to happen. So the key is for him to hold ground and not fall for any... phone calls that he's going to get in the next 9 months about changing and lowering the rates so the market moves because election is coming around the corner.
Scroll the bottom.
I don't know what Powell's going to do, but we will know, to give him proper credit, by January of 2025. It's going to be a very hard next 15 months for Powell.
And so Pat, why he's looking at Venezuela screwed then, right? From what they just did, their future does not look bright.
Why do you think Venezuela finally, Maduro agreed to come and negotiate with Biden to say, we're willing to sell oil to you and we're willing to do a real public election fair, even if I lose? Why would Maduro agree for something like this? Because his people are getting crushed.
Wow.
Public embarrassment on what's going on with Maduro in Venezuela right now.
I think
absolute public embarrassment.
Zillow is taking the charts off, Pat. You know the one I'm talking about? They used to have the charts in here. Scroll down.
Yeah, they show it at the bottom usually.
The pricing history, and it goes up.
There it goes.
Take a look. Does this look like the Venezuelan stock chart?
God.
Do you notice something that happened?
This is not normal, bro.
Oh,
but by the way, okay, if you guys want to talk about my house, let's talk about my house.
Let's print money.
Okay, Tom, let's talk about my house. You know there was a record-breaking sale in Fort Lauderdale last week? My realtor sold it. You know what the house sold for? $40 million in Fort Lauderdale. You know how big is the land? 0.4 acres.
No way.
Our house is 1.2, 1.3 acres. On the water, 810 feet of water frontage. One of the biggest in all of Fort Lauderdale. We bought the house for $20.4 million, 2 years. That's the house right there. Zoom in. That right there. When is the date on this? Can you zoom in so I can actually give the real date?
Beachfront home.
Just that
October 13th.
That square right here, Pat?
That's 0.4 acres. Sold for $40 million.
What?
Record breaking. By the way, our house that we bought for $20.4 million 2 years ago, we closed on June of 2021. That house today is a $40 million house. Some say more, okay? Now, I may sit there and say, look at me, I made this money. Totally get it. But guess what? I want people living close to my community to have economic growth, because if people around you are having economic growth, your kids are in a safer community, you're doing better, you're not worried about going shopping, you're not worried about what your wife is doing, you're not worried about what your employees are doing, you feel safer.
Yep.
You want the people in your community to be doing better. This is not good, okay? This is very good money-wise. Yeah, we made a quick, $20 million, say, on the house. Yes, but if if this continues, yeah, it's going to be a very, very catastrophic issue. When you see numbers like this and 1 year go like this,
Not good.
it's not real. It's fake. It's purely temporary, by the way.
If this continues, your kids are going to live with you forever, and Vinny and I are moving.
I'm going to move in.
Guys, let's figure something out.
Your garage is bigger than my
Let's
apartment.
figure something out to do something like that. But no, I mean, to be serious, as much as, you know, we're having these types of conversations, kind of like what's going to happen here, I just hope Jerome Powell and the establishment doesn't have dirt on him from his past with a girl or with a man or anything else or with money or with his kids or anything to come to him saying, we have this on you, you better lower the rates. I hope that knock doesn't happen to Jerome Powell, because if it does, it'll be temporary market going up, celebration.
Sugar high.
It'll be catastrophic for the next 4 years.
And speaking of
25
Powell,
through 29 will be catastrophic if he lowers the rates.
speaking of Powell, it sounds like he's doing something what I think is sensible right now. He's come out and saying we were expecting a Halloween quarter point and then nothing to the end of first quarter. That was all the Fed Board of Governors were all talking about the same things. They look at economic factors. Well, they don't want to spook the market. Another quarter point will spook the equity markets, the stock markets. They don't want to do that. And they also feel that right now inflation has not gone down to the 2% target they wanted it to go down to. It's fighting hard to stay at like 4%, give or take. So, but what Powell has said, with the war, with uncertainty, with a lot of things on there, I'm going to have a rate increase pause. And everyone on the Fed board seems to say they're going to go through fourth quarter. We're 1 month in the fourth quarter now, almost November, and through first quarter. So we're going to get to the end of first quarter, because the end of first quarter is when you see how good Christmas was, how good was spending, how good was all that, and take a look at how it's going. So what they're saying is, I have given you the remedy for your food poisoning. Now you just have to kind of wait it out. You know what I mean? You have to wait. And talking about waiting to the end of the first quarter. I think that's sensible, because I don't want volatility. What Pat is talking about is volatility, and it runs in two directions.
Yeah.
Crash, ha ha, on the rich, you lost everything. Yeah, well, so did your 401k. So did other things that are going on. And now it's near impossible for you to buy that.
Yeah.
You don't want it.
No.
You know, it's easy to laugh at the risk. What are they going to do? Print another $1.4 trillion? Get ready for $16 egg.
Trust me. I'm telling you, like, even right, you know how many people are coming right now saying, Pat, I can get you 45. I can get you. You know how many strange phone calls? We're not selling a house, bro. But the way to capitalize right now would be to sell, sit on cash, rent. 2 years later, come back, buy, kind of like play that game.
Yeah.
No, but so, and then when you're talking to your investment bankers, we're talking to your money managers. It's like, okay, do you go equity? Do you not go equity? You're talking to your peers. Okay, if you go equity, rates stay high, unemployment takes a hit, recession comes next year, equities could get destroyed the next 12 months. Could get destroyed the next 12 months. But if you're not in equities, Jerome Powell lowers the rates, and it goes to whatever, 4%, 5%, Dow's going to go to 41,000, 42,000, potentially within 12 to 18 months. Yes or no? It'll go like this.
Yep.
Skyrocketing, okay? So then your risk is, do I stay in the market? Do I not stay in the market? Both ways, it's risky today. There is no, like, path to look at, because we've never experienced printing the kind of money that we did, going through a pandemic that we did, going through working from home shit that we did, going through 2 wars that we got going on, one of them being so unstable. This is like, there is no financial analyst that knows the right investments to make today to weather whatever is possible, capable of happening in the next 3, 6, 12
So
months.
what do? You put a little everywhere, and
You just have to
wait?
do that. You have to do that. You have to own a little bit of gold, okay? This is not a sponsorship. I just tell you, the best sponsorship is when I'm not doing a sponsorship. You have to own a little bit of gold. You have to look at what Bitcoin did. You know what Bitcoin hit? Have you guys seen what Bitcoin just hit?
It gets right back up.
Go to Bitcoin. Where's Bitcoin at right now?
30-something?
Yeah, look at Bitcoin. Like, people are like, Bitcoin just hit what? 35,000, 36, 35,000. Well, Bitcoin was like, go
6
to
months or something.
Last year. Go last year. Yeah, exactly.
Yeah.
Look at that. Hit 15,000. It's at
nice.
35,000 now. And look how it's going up.
Double.
You know, BlackRock just bought, I think BlackRock just introduced Bitcoin ETFs. It's so unpredictable today on what's going on.
The
So
danger. Sorry. Go ahead.
you got, all I want to say is, I'll give it back to you. You just got to make sure the concept of
Diversified.
diversification normally is not something I would say all the time. Today, if you can predict the future and you're willing to go fully risk, which I'm comfortable with, then do that. You're taking a risk because you could have a massive this or a massive this. But if you don't have that risk tolerance, your solution right now is diversification.
Yep, and printing money is dangerous. And Pat and I talked about, and actually I talked about, I'll take credit for this. I thought the interest rates were going to go all the way to 10%. I said so. And they've made it to 8%, 8 1/8. As a matter of fact, last week they were actually 8 1/8, even if you had 670 credit right at.
Jeez.
Right now they're about 7.5, 7 3/4. But there's something Pat said that people don't remember. And you may not remember, and I'm not trying to insult the audience, but you go back a year ago when Pat said he was really reacting. We printed what percent of the total money we had ever printed in 6 months? Do you remember what the number
40%.
was? 40% of the total money ever printed in these United States. Now, I say print. A lot of people get upset. It's issued because it's digital now, too. It's not paper. It's not all paper. But we call that money supply. 40% that you did it in 6 months. And look what you did to those housing prices. You did a Venezuela.
Right. Now, 10% is
Now,
not-
and so I say now, people say, do you understand now? It's like
But I'm telling you, Tom, I hope Powell doesn't break.
I hope he doesn't
Powell
too.
doesn't break because he needs to stay. It needs to stay like this, and it's going to be painful. Guys, look, not to do a plug for my book, but I'm talking to Chris Williamson last week on his podcast. What a freaking stud of a guy, by the way. This guy, can you pull up his picture, Chris Williamson? He's doing this podcast, and I pull up to this place. I'm like, Sam, where are we doing a podcast? He rented out this entire place that filled with bookshelves, absolutely sick set that he had, and we start talking. And we had a nice 2.5-hour conversation. One of the biggest podcasters in the world. He's a stud. And we're talking about the book that's coming out, Choose Your Enemies Wisely, Business Planning for the Audacious Few. By the way, it comes out December 5th, but we're about to release the introduction and chapter 1 of the book. If you want to get a copy of the introduction and chapter 1 way before everybody else gets it, text the word book to 310-340-1132. Text the word book to 310-340-1132. In the next few days, if you purchase a copy or the Audible and the book, we're going to send you to chapter 1 and introduction, but just hang tight. You can place the order, and then you'll show me the receipt. We'll send it to you. But text the word book to 310-340-1132. Let me continue. A year and a half ago, I'm consulting for these real estate guys, mortgage guys, different companies, not necessarily companies' name is mortgage guys, but guys that are in the mortgage industry. And I'm telling them, listen, you have one too many Rolls Royce. You have one too many Ferraris. You have one too many Chanel purses. You have one too many of these things. You're not doing the right thing. It's too risky, okay? Settle down a little bit. You're too loud. You're too arrogant right now. You're too cocky. You think you know it all. You think you're untouchable. You think you're not going to be hit. You're not paranoid enough. You're not concerned enough. You're not prepared enough. You're not anticipating what could happen next 5, 10, 15 moves. The crisis. You're drinking too much, okay? The CEO of the company, the oldest company in America that's 1,500 years old from Japan, they said, what is the key to success and for you guys to be around? He says, don't drink too much. What he was talking about is don't drink your own success too much. Don't get too, like, oh, do you see what consume with your own success too much, right? So today, people are not prepared for what's about to come. So for some people that have been preparing for this, their wealth is going to go up 5, 10, 20, 40 times because they've been preparing for this. But those that are not, they're going to get destroyed. For the people that are in the community that said, how could you say this mortgage? We need rates to get down. I'm getting destroyed. No, you thought 3% was going to be around for 20 years, and your business model is a failed model. Mm-hmm. You rely too much on 3% interest rates, which is fake. We can't have it at a rate like that. So we have to go back to being responsible. But I think the next 6, 12, 18 months, the whole concept of team spoor.
How much, because you mentioned the election, Pat, and Powell and pressure and who knows what the hell they're saying. How much of this situation, which is a volatile situation, is going to affect voting for the election? All those people in the middle.
This is a very, very volatile times we're living in. Dude, when Jamie Dimon says this is the most dangerous times we've lived in the last few decades.
Not good.
Why would he say that? Your bank that you are the CEO to transact $7 trillion, it circulates every single day.
$7 trillion.
Why would you say this may be the most dangerous time the world has seen in decades? You know what a job of a CEO of JP Morgan. Let me just kind of give you an idea what his job is every day he wakes up. You know what his job is? This job.
Yeah.
What can I say or do to calm my customers' nerves?
Wow.
Yeah.
Guess what? You don't say something like this.
Yeah.
This may be the most dangerous time the world has seen in decades, CEO Jamie Dimon. Then you got Warren Buffett and Charlie Munger coming out talking about what they think is going to happen in real estate next year. Or you got Ray Dalio saying World War III likelihood is now 50%.
Michael Burry.
Right.
Why would they say that?
Yeah.
Why would they say that? They don't want a market crash. Their money's tied to all of this.
We were warned that Trump was going to cause all this stuff.
Yeah.
It didn't happen under Trump, and now it's all happening, and they're just finding other excuses why and all that kind of
And by the way, it's so interesting you're saying that. This is why billionaires like Shamat are saying, I voted for Hillary.
Switched.
I voted for Biden. But now I'm kind of starting to ask myself, maybe what Trump did was a B+.
Yeah.
Maybe we need him back. The approval rating you're saying with Biden, all 30%, 30 to 31%, 30 from Democrats in some areas. It's like so for people, there's only so much American people are going to take with a president they voted for until it hits their pocket and the economy. They're like, no. It's time to switch.
So if you like this clip and you want to watch another one, click right here. And if you want to watch the entire podcast, click right here.